financing your next billion gain insights into successful engagements with venture capitalists and investors. Get ahead of industry trends, hear from industry leaders, influencers, founders, policymakers, and governments. Stay in the know on how to finance your next billion.
Good day, everyone, and welcome to Financing Your Next Billion Live. And I'm your co-host, Jerome Curry, and I have your other co-host, Yvonne Gamble. Yvonne, tell me, how's everything going on in your world? Is it a little wet today?
Oh, yes, it is. It's a whole lot wet today. Yep, it's been raining all morning, and I'm understanding it's going to rain for pretty much throughout the day. So instead of a rainy night in Georgia, it's going to be a rainy day in Georgia.
Wow. So that is that way. You know, it has been raining a lot lately. And well, the good news is that things are starting to turn around a bit in the economy. So that's certainly good to hear. Cases are plummeting to lows. So that's certainly good news to continue to have. And so we'll just kind of hop right into our topic this day and go ahead and take it from here. Now, today's subject, we're going to be talking about calling in your bank guarantee or your sovereign guarantee, I'm sorry, your bank guarantee or your business line of credit. Now, I want to just kind of go over a couple of pieces and just let you know these are some topics that will help you in being able to get to the next level and understanding your finances. Yvonne, I always hear this quote, the people perish for a lack of knowledge. And a lot of times that's something that we see that's something that we see with our founders, or something that we see with our clients is that, they just sometimes don't have the knowledge, and we're able to kind of help them with that. And that's what these sessions are really designed to do, to help you to get a strong base of where you are and where you should go in your financing. So just talking a little bit about calling your bank guarantee or your sovereign or your standing bank letter of credit. One of the things that you don't want to happen is for your bank guarantee or your letter of credit to get called. Now, what this amounts to is essentially a breach of contract by the developer. In our previous sessions, we talked about the circumstances in which the bank guarantee would be called back, and usually that comes from a sense of breach of contract, whether you haven't met certain milestones, certain goals, certain things that were set aside in your terms and conditions that you got at your closing. Now, one of the things that I want to share with you that is so very important is that when you're doing your closing and when you're putting together your package for an investor, I really want you to think about your due diligence. And I want you to think about a couple of areas of due diligence so that you won't experience these circumstances of why your bank guarantee would be called. The first area is, of course, what we discussed in our previous sessions, the financials. So making sure that your financials are in order, because that's going to be one of the first things that happens when the ship isn't right. Typically, there's always something going on with the money. As some people like to say, there's funny money, and in other circles they say the change is looking strange. So so what you want to do is of course during your due diligence going over those financials is one of the other point that you want to take a look at as well is your previous performance. So looking at the performance that you have during your due diligence phase, were you able to meet some of your own milestones? Were you able to meet some of those goals before? Because that can give you an indicator of some of the things that you'll be able to accomplish in the future. If you haven't jumped 100 feet or if you haven't jumped 100 times, then telling someone or telling the investor that you're going to jump 1,000 times, that may be more than what you can handle. So you certainly want to take a look at your performance, doing your due diligence, and making sure that those things are in the line. The next thing in taking a look at your due diligence is certainly taking a look at your team structure. So who's on your team, and is your team performing? So these are some things that you can look at. Is my team performing at the level that I need to have them perform at? Because again, all of these factors are going to be some of the reasons why you could breach your contract, because your team isn't performing, because you aren't meeting the milestones, because your financials aren't in order, and ultimately because you aren't meeting the requirements of the contract. So that's something that you really want to take a look at. You really want to take a look at those areas of due diligence, and then be able to move forward from there. Yvonne, any thoughts on those on why that would be why it would be called back, and some things they can do to avoid it?
Yes, really, when you are setting up your system, this is a systems and operations issue and process where you really want to have contingencies in place for all of these types of things. Contingencies in place for staffing, contingencies in place for financing. Sometimes, let's start with staffing. With staffing first. With staffing, you may have groups or teams or crews that go out and do their part, and then the next crew will come in and do theirs. And so therefore what you want to make certain is that if for some reason you have a staff layoff, or you have to do a staff layoff, or you have slowdown in work label, that you have other companies that you've actually called in, so that you make sure you keep your staffing flowing and always there and always knowledgeable. So you want to have perpetual training for your staff, or especially for new staff or for onboarding, and you want to be able to do that very quickly and very succinctly. And then also another thing where we talk about, like with the finances, you want to make certain that you have in place something, because we can go through a burn rate. We can anticipate what something is going to cost, and it looks good on paper, and that's wonderful. But when it gets into the actual execution and usage, your burn rate may be higher than what you expected. And your burn rate, that simply is, how fast am I spending my money, that my allocation, for this month or this week or, this quarter, what have you. And you may be going through that faster. So you want to have some of those contingencies in place to kind of offset some of that expended capital, so that you always keep everything level. So really, when you're talking about, is my standby letter of credit, is my bank guarantee going to get called, those rest on the principles of the letter of what it is written on those terms and conditions is written into that. That's what they rest on. So therefore, what the bank, or who's ever issued you that letter, that standby letter of credit, be an insurance company, an investor, what have you, or that could be a sovereign, where where it's a country, and you said you were going to do a certain thing by a certain time, and that date is coming, and it's not looking as though that's going to be met, then there's always other remedies for that. And we're going to talk about those a little bit later. So therefore you want to have some systems in place, some processes in place, and maybe even allocate up front a team of people that it is just simply their job to watch those milestones and to make sure you adhere to them.
Excellent.
And that leads us.
Excellent.
That leads us.
That leads us to that leads us to our next topic. To be clear, the bank guarantee and sovereign and the standing bank letter of credit must not be called. I just want to say this. So it can be called on both ends. So let me explain this. So this bank guarantee, it's guaranteeing the project, that the project is going to go well, that you're going to break ground, that you're going to get to completion. So this bank guarantee can be called by both parties. Both, it can, if you're not meeting certain governance obligations with the bank, the bank can say, you know what, listen, this isn't looking good. We want to pull, we want to pull our bank guarantee away. And it can also be called by the investor after funds have been transferred. So that's something that I think, Yvonne, you've got some great notes on to share with people.
Right. Yes, and that can be, and we have to be very, very careful. And this is where we get into the point where we want to look at some other remedies. What else can be done, and we want to look at this not at the point where it's kind of already going down. We're in a total meltdown, in which we're scrambling, trying to pick up the pieces. But you want to actually be looking at that before you get to that point, and where are you going, and where are you, where you might be, have some things that need to be shored up, or some things that need to be maybe changed or rearranged or what have you. And sometimes you may get to the point where yes, you do run out of money, or no, you're not going to meet a particular benchmark or something that you already know. That doesn't come to you at the moment you don't make that benchmark. Well in advance. So what you need to do at that point is contact your bank, contact whoever actually issued you that guarantee, and have that conversation with them, and give them a report, let them know what is going on and what you and your team have come up with as a way to mitigate that particular that missed deadline, or that missed interaction. What have you done, or what are you doing? And therefore, because you can pretty well look at 2020 as an example, there were many missed deadlines. There were many, missed, payments, missed schedules. Everything had to be basically rearranged and redone. But a lot of the standby letters of credit did not get called. A lot of the bank guarantees did not get called, because why? People were proactive and not reactive. This is the time in your financial window, in the whole financial arena, for you to be the most proactive that you have ever been. Is the time at which there is going to be any consideration that may be in jeopardy, that guarantee that you have. Because remember, that guarantee does what? That guarantee guarantees for the life of that project that you are going to adhere, and that loan, that money's is going to be there. So if they call that away, that's going to take that money away from your project. That's not going to guarantee that, and then investors begin to pull out. So therefore, what you want to make certain is that those things, irrespective of anything else happening, you want to protect that, because that protects your reputation. It protects the reputation of the loan company. It protects the reputation of the bank. It's not just simply resting on your company and what you do or do not do, keeping in mind that the bank gave you the guarantee that said this money would be here. The loan company or the investor put up their money. So that's three people who are going to be disadvantaged or disenfranchised if that bank guarantee or that standby letter of credit gets called.
Absolutely. Absolutely. That is an excellent point. And I think one of the things that I hear echoing so clearly is transparency. I think sometimes entrepreneurs have this thing of where they feel as though they have to suffer in silence, and they have to fail alone. Let me tell you, that's just not how it works. I'll give you an example of this. when we think about the big three automakers, and when they were going through turbulent times, they cried out for help. They cried out for
Yeah.
help to the government, and they were deemed too big to fail. And now, and so what happens? What happens with entrepreneurs? Sometimes we sit in silence and we're like, well, hey, you know what? I'm just going to hope this works out okay. And you see the ship sinking, it's going down, it's going down. You're like, I'm not going to say anything because I want to be brave, bold, and courageous. No, cry out, cry out, help! This is what's going on. Get to talk with your if you've got a board in place or if you've got advisors in place, go to your board of advisors and start looking at options. And as Yvonne was saying, not waiting until everything's on fire. Start as you start to see those early warning signs, go ahead and be proactive and start making those changes that are absolutely necessary. And that kind of leads us right into our third topic, which is really talking about how the bank guarantee really serves as risk mitigation for both parties. So it serves as risk mitigation for it serves as risk mitigation for the investor as well as for the bank, because again, the bank is not going to be on the hook for the entire for this entire project if you get to your completion deadline, and that's good for them. So they're able to get fees and not maintain the whole risk of the investment. The other thing that happens as well is that the bank guarantee can only be called up until the extent of the funds that are transferred. So let's say, for example, if you do terms and conditions, and your terms and conditions have where you'll be getting a certain amount at a certain period of time, and you get that certain amount, well, to the extent that the bank guarantee can be called, and that's the importance of having that drawdown schedule and making sure that that drawdown schedule is accurate and up to date. Now, before I dive a little bit more into that, I just want to hop right into a 60-second commercial. I see the lights flashing here, and certainly want to give our sponsors some time. We'll be right back to you.
You did it, Yvonne. I was switching the notes, switching the name, and I'm thinking, okay, I'll put up the name of the show. Maybe he'll get the message. Then I put up our names. Maybe he'll get the message.
I didn't know you was gonna do a break. I thought the show was. I didn't know you was gonna do a break. I was gonna hit that
you
thing.
Go. I said we'll do 2 topics. We'll do a break, and then we come back. And then
Well, I still got notes on it. I can go.
You go come back. When we come back, you'll go back over all of that you did. You'll come right. I'll talk you in. I'll introduce you in, and then you can just take that subject away. Oh man. Oh, I was like, okay, this ain't working. Let me just stop this right here.
Well, it was true. I saw the lights flashing. Oh goodness,
that's too much. I gotta do some more commercials for platform and for Intercred. Some more short commercials. So that way, because we got some shows here. We got some great shows, and so I'm using all the commercials I currently got, but I'm putting them in there.
Man, I'm telling you,
you're gonna love it when you see it. You're really gonna love it.
I'm believing that she's gonna be able to get them to us today, because I know she said last night she was finishing up the last one, so they should come.
That's fine. As soon as she gets them to us, they're ready to go. I just drop that front page in there, and then they're ready to go. Okay, so you excited, you hot and hopping. So we'll come back in. I'll come back in with with the name of the show, and then I'll come in with our last topic and call you in. Okay.
Okay.
All righty. So we're gonna come back in and And we're back if you're live here on FYNB Talks. And if you're just joining us, our subject today is calling a bank guarantee or standby letter of credit. And we've talked a lot about that. So if you are just joining us, thank you for joining the show. If you're coming back, thank you so much. And we're going to kind of go right into our segment here on, what happens if a bank guarantee does get called. We talked about earlier, the circumstances under which it could be called. And then we talked about the ramifications, if it gets called. And so now, if that bank guarantee does get called, what happens with that? What are we looking at, Jerome, for the bank, for the founder, for lender, investors? What are we looking at, for all these people who, pretty much had rested everything on the fact that that bank guarantee was going to hold up to the end of that project? So what actually happens at that moment?
Absolutely. So what actually happens at that moment is that the bank guarantee is called up, it's pulled back to the extent of the funds transferred at that point. So let's say, for example, an investor has put in $3 million into the project, and you have the bank guarantee. You have a bank guarantee for a $25 million project. Well, the investor is not going to call based on the terms and conditions that's set forth. The investor is not going to call $25 million from the bank. The investor is only going to call the funds that have been distributed up until that point. So if the investor has distributed $3 million, they would put a call for $3 million. Now, here's why here's why the drawdown schedule now becomes very critical. When you're looking at your drawdown schedule and how much money you're going to need. Again, these things can serve as a risk mitigation factor where, we only need this amount to build this amount for this period of time. Why is that important? Well, because in the event that something goes wrong, again, the bank guarantee is only going to be called up to the amount that has already been distributed. So if $3 million was sent out, the investor is only going to call $3 million. And that's something that's important to know for the bank that's issuing that bank guarantee, to know that, listen, we have an airtight drawdown schedule so that in the event that there's a massive failure or coronary failure in our project, the investment will only be called up until the funds that have been distributed. And what this does, this provides a low risk environment for both the investor as well as for the bank. And now you have, and as well as for you as the founder, you now have that opportunity that if that project didn't go well, guess what? If you can get those wheels turning, the investor does not want to call in that bank guarantee. They've already gone through underwriting. They've already said that, this is a valid project. We think that this could go forward. So the investor does not want to call those funds back. But in order to preserve their capital, they will call that bank guarantee. And typically it's for those reasons that we mentioned earlier. So again, having that transparency, having those conversations, those communications, being proactive, all those things become very, very critical. And Yvonne, what do you have to add to that by chance?
Well, with that, no, I think you pretty well tackled that particular subject, in whole and in part. There's not a lot, simply to be said. These things, they're written. These are terms and conditions that are negotiated. They're negotiated, with the founder, with attorneys, the CPAs. Everybody is called in, to negotiate and to agree upon, and they have ample time, to read these documents and go back over them. So generally, just be apprised that so that when it comes time to execute on some of these things, and they have to call these things don't, they'll allow for a remedy if you do what Jerome has said earlier, and that is you be proactive and not reactive, and you come and you ask, you call for help. Then you would get more time. If you simply wait in the dark and hoping that this all goes away, and then that way, generally, when the bank calls this or an investor calls this in, calls for those monies, then you generally have run out of time to make any restitution or what have you. And that's going to obviously affect your ability on future projects on that, not only that project you're working on, but on future projects. So with that, I really just want to say, thank you to everyone for joining us, on this. And, as you said, this information is out there. It's out there on our YouTube channel. It's out there on VMO. And, it's also available on our website, platform capital .com, platformcp.com. You can go out there and you'll see it up under live sessions, live speaker sessions, and that's where you can always, it's evergreen information. So go back to it, early, go back to it often, and look at it again and again to the point where you understand. And we're always available. You can reach us on LinkedIn. You can reach us at www.platformcp.com or www.sandpeakfinancialgroup.com. We look forward to hearing from you. And anytime it's talking about finances, it's FYNB Talks. Thank you very much. Have a wonderful day.
Financing your next $1 billion? Contact us to be a guest. Join us for the next show.